Hey everyone, Eric here. Thanks for tuning in. The credit score. Something that I check on a daily basis and I unjustifiably obsess over. Growing up, I never truly understood the long-term benefits that having a perfect credit score would award me. All I have to say is thank God that my parents helped me apply for a credit card when I was 18 years old because it saved me a lot of time and effort. I always love hearing my parents battle each other and compete over whose credit score is better. I guess that's just the type of family that I have. I guarantee you that this video is going to help save you or make you thousands of dollars in the future if you just follow and implement the points that I'm going to be sharing with you shortly. Then I'll go over each of the factors that affect your credit, from your on-time payment history to your existing credit inquiries, utilization, and credit lines. The tips that I'm going to be sharing with you will immediately boost your credit score, will never charge you $1, and also be extremely easy to implement into your daily life. By the end of the video, I'm hoping that you'll have all of the knowledge that you'll need to acquire a perfect credit score. And as always, if I provided you any value in this video, feel free to subscribe to the channel if you haven't already, leave a like on the video, turn on notifications so that you know whenever I post a video, and feel free to comment below what your credit score is currently and what you want it to be by the end of the year. So what exactly is a credit score? In school, students are constantly graded based on their academic performances. If you were a straight A student, chances are that you were probably awarded with acceptance to some of the most prestigious universities, and you also might have earned some merit-based scholarships along the way. In life, however, your credit score is essentially a reflection of how well that you can pay off your debts. The higher your score, the less of a risk you are in the eyes of the lenders, and the cheaper it is for you to finance a personal loan, a business loan, or a mortgage. So now it's time for you to leave behind the old $100 textbook that you probably didn't read and start focusing more on your career goals. Credit scores can range anywhere between 300 and 850. Consumers with scores between 800 to 850 are considered to have perfect scores and qualify for the lowest interest rates. This essentially means that these borrowers are the least risky to lend money to and can borrow money for cheaper than people with lower scores. Scores between 740 and 799 indicate that you are a very responsible borrower and you'll be rewarded relatively favorable interest rates. Those with scores between 700 to 740 are pretty solid and will be given above average treatment by the lenders. Now, if you have a score of less than 700, what better time than now to learn more about your credit score and how to increase it? It'll be hard for people to qualify at this credit level for a loan in this current market. Lenders have tightened their budgets and aren't willing to take the same risks that they used to take before the pandemic when lending to individuals with less than stellar credit. However, if you do manage to receive a loan at this credit score, then you will be paying substantially more in interest. And if you're in 600s or below, well, let's just say I'm very glad that you're watching this video. Now, before I get started telling you the individual factors that will affect your credit score, I wanted to show you the website and the application that I use to actually track and monitor my credit score pretty much on a daily basis. I use Credit Karma to monitor my credit score as well as apply for new credit cards. However, you can also file your taxes, apply for home loans and auto loans, and start a savings account using the site. They also have an app on the App Store, so I really recommend checking it out. I also wanted to quickly touch on one of the most rapid ways of building your credit score, which is by piggybacking or adding an authorized user. This would actually allow you to add yourself to somebody else's credit profile, and within 30 to 45 days, you would be able to adopt their entire credit history. For example, let's say that you really wanted to apply for a home or auto loan, but didn't have a good credit score. Once your family member or friend agrees to add you as an authorized user because you're incredibly persuasive, you can then hop on a quick 5-minute call with a creditor and make the request. Now, I know what you're thinking. What if I get added onto somebody else's account and I damage their credit score? Not to worry, the primary account holder's credit score will never be affected by yours. For example, let's say that you have a 650 credit score and decide to add yourself as an authorized user to your parents' account that has an 800 credit score. They will not be affected. However, their positive credit history will be shown on your credit report, so that will help bump your credit score. And if you're wondering if this is all legal, come on, you know I wouldn't give you advice to go break the law, right? Anything for thumbs up on the YouTube video, right? No, but in all seriousness, this is completely legal. You don't have to just take my word for it. Piggybacking credit has been used for nearly 40 years by mortgage brokers and lenders. It became a popular way to boost credit scores because of the Equal Credit Opportunity Act of 1974, which allowed the process to legally attach credit accounts to someone else's. However, piggybacking could be considered bank fraud if you're using it to deceive a financial institution or borrow money under false pretenses. Bank fraud could cost you $1 million in fines and send you to prison for 30 years, so just use your best judgment when it comes to credit piggybacking. Now, I wanted to go over the actual factors that affect your credit score and what you can do to maximize them in 2020. Now, the first thing that affects your score is very simple. Do not ever, and I mean ever, miss a payment on your credit card. This amounts for 35% of your overall credit score and is the single most important thing that lenders look at when determining whether you are a trustworthy borrower or not. If you miss just one payment, your credit score can be affected tremendously. For example, let's say that you have a credit card for 4 years or 48 months. If you missed one payment, then you would have made 47 out of 48 payments, which which amounts to about 97% of on-time payments. According to Credit Karma, this would put you in the red, and that is not good if you want to achieve a perfect 800 score. However, let's just say that you've had your credit card for 9 years or 108 months and missed just one payment. This missed payment would not affect your scores drastically since your on-time payments would exceed 99% and put you in the green. And you can actually prevent yourself from missing any credit card payments by enabling auto pay to make the bare minimum payment every single month. By doing this, you will ensure that you will never miss a credit card payment, but I still highly recommend that you pay the full amount within 30 days to avoid high interest rates. The second thing that you're going to need to prevent in order to obtain a perfect credit score is to make sure that you are not maxing out your credit cards and keeping a low credit balance in relation to your credit limit. This debt contributes to 30% of your overall credit score, so it is extremely important that you get this part right. Credit Karma recommends that you stay below 30% of your overall credit card usage. For example, for every $1,000 of credit that you are given, you must maintain below a balance of $300. However, if you really do want that perfect score, I would recommend staying below a 10% usage. My credit limit is hovering around $12,000 at the moment, so as long as I stay below $1,000 borrowed per month, I should be fine. I would also recommend asking for a credit limit increase between 6 to 12 months of actually owning a credit card. The reason behind this is that the higher that your credit limit is, the more that you'll be able to borrow without facing any negative point docs. This is why I currently have 2 credit cards and plan on adding more to my arsenal, just due to the fact that the more credit cards that I have, the higher that my credit limit will be. Just understand that I'm not going out and applying for a bunch of credit cards all at once. I just want to have multiple credit cards in the future so I can continue to build my credit and prove that I'm a responsible borrower. To recap, make sure that you apply for a credit card as soon as you turn 18, and if you're not 18 and you're already 23 like myself, then go ahead and apply now. Pay off your debt within 30 days and make sure to stay under that 30% threshold in terms of credit utilization to make sure that you don't get any point docs. And also make sure to request for a credit increase every 6 to 12 months. Before I move on to the next point, I want you to understand that if you are currently utilizing a high portion of your credit limit, just go ahead and pay off that debt. Your credit score should normalize after you pay off your debts, even if you are over that limit. For example, let's say that you're utilizing 60% of your credit limit at the moment. Just go ahead and pay off at least 30% of that and your credit score should normalize pretty rapidly. The third thing that you're going to need to focus on and requires the most amount of patience is your credit history. In simplest terms, the longer that you've had a credit card, the better. Your credit history amounts to 15% of your overall credit score, so this is why I highly recommend starting or applying for a credit card as soon as possible in order to start building that credit. For example, if you're 18 years old and you applied for a credit card and you kept it until the age of 23, you would have about 6 years of credit history. However, if you do apply for a credit card at this time, your average history will actually be cut in half from 6 years to 3 years. This is why you should never close out old credit cards because it could severely impact your credit history. Even if you don't really use that credit card, I would highly recommend actually just swiping that credit card every now and then just to make sure that it stays open. Credit Karma wants borrowers to have more than 9 years of a credit history, so for anybody in their 20s, this just simply isn't possible. This is where patience comes in. Just apply early for a credit card and be a responsible borrower, and over time you'll then be able to strengthen your credit score. The fourth factor that affects your credit score is your total open and closed accounts. This amounts to 10% of your credit score and is honestly a little bit counterintuitive in my opinion. The reason that I feel that this doesn't really make sense is because you're actually awarded for having multiple lines of credit. Now I know that you've probably heard not to have a bunch of credit cards all at once, and while that does make sense, just hear me out. If you have a few credit cards, a car loan, and a mortgage, and you're paying off those debts responsibly, then you're actually demonstrating to the lenders that you are a responsible borrower and you can handle a variety of different loans. And just a side note, banks are essentially happy to lend out money to people that don't necessarily need it just because they are seen as less of a risk. Credit Karma recommends a staggering 21 different accounts for you to actually be in the green, which I can imagine will take the majority of you a pretty long time to build. Knowing this, you should begin to diversify your credit lines, and over time your credit score will strengthen as a result. However, this only amounts to 10% of your overall credit score, so I wouldn't stress too much about it. The fifth and final factor that affects your credit score is the amount of hard inquiries that you have on your credit report. This also adds up to 10% of your overall credit score. Whenever you apply for a new line of credit, like a credit card or a loan, lenders are actually able to see that on your credit report. These applications are known as hard inquiries. If lenders see that you have multiple credit cards and you've maxed them all out, they're probably going to freak out and think that you've run out of money. This makes you a higher risk and hurts your credit score. This is why you should avoid opening multiple credit cards or taking out a bunch of loans in a short period of time. Also, avoid applying for more credit within 9 to 12 months of making a big purchase like a mortgage or pulling out a personal loan. Please note that these hard inquiries will be removed from your credit report within 2 years and will only affect your credit score within the first 12 months. So again, the two most important factors that you need to worry about are making sure that you make your payments on time and making sure that you're not maxing out your credit cards and keeping your utilization under 30%. Credit Karma recommends having 0 hard inquiries raise every 12 months, which is highly unrealistic. As long as you are picky about what credit lines you're going to be adding to your arsenal, I think you'll be okay. This is why it's important to build your credit score early and to be a responsible borrower, so that when you're ready to purchase a big item like a home, your credit score will be high and you'll be awarded the best interest rates for your efforts. And that's it. Thanks so much for watching my video. Feel free to subscribe to the channel if I provided you any value. Turn on notifications so that you know whenever I post a video. Check out my blog at millypreneur.blog and feel free to follow me on my Instagram at Eric_Anthony_Lopez. And have a great rest of your day. Enjoy the fireworks.